Hey, so being from Metro Detroit and growing up in a Chrysler family, I have a lot of friends and family who have been impacted by the strike at GM right now. I wanted to take a minute and talk about, from a mortgage perspective and buying a house, how this impacts you. So first, let's talk about doomsday scenario. This is, you are a GM employee, or let's just say any union employee who's on strike. Let's make this video applicable for anybody in the future as well, because we've heard some rumors about Ford potentially having a strike this year too. So what that means is you're in contract. You've already gone shopping, you have a realtor, you've worked with a seller to negotiate terms, you may have already had an inspection completed, an appraisal completed, you may have your financing all lined up, and now you're on strike. Well, almost all lenders are going to require that you go back to work before you can close. The reason that this is important is because when you initially went into contract, there's a series of dates and deadlines that you have to meet in order to get to the closing table. If the closing date expires and you haven't come to an agreement with the sellers to extend it, then they're going to have the ability to walk away from the contract and look for another buyer. If you're the buyer in that situation, you have a couple things going for you. Number one, it's after school started. So that's traditionally when buying season is at its peak, which means there are fewer buyers out there. Number two, you're in an economy that is driven by the auto industry in this case. So in that market, there are fewer prospective buyers now, even still. Number three, the seller may also be in the auto industry. And if they are in the auto industry, they may be facing the same challenge on the purchase of their new home. Let's say the reverse is true. If you're the seller, think about all of those things. Understand that strikes don't last forever, and we've heard some good things from GM about how progress is being made towards ending the strike. All right, now let's talk about some other situations. You're not yet in contract, which means maybe you're just curious about, hey, I think I'm ready to buy a house. Should I wait until I go back to work? No. In this case, if you know what you were making previously and that it's not decreasing, it's a great time to start talking to a lender so you can get your ducks in a row prior to going into contract. There's a couple things that the lender is going to ask of you. Number one, how much money do you make? And you want to be really upfront with the situation at hand. Number two, how much do you have in assets? What do you have in the bank? What are you going to bring to the table for down payment? And number three, what's your credit like? Don't let this time become an opportunity to fall back on the credit cards unless you absolutely have to. In the same vein, I know you guys are making like way less than you normally would, so don't drain or deplete your savings that you want to use for down payment. Having this conversation with a licensed loan officer now is going to help a ton when the time comes for you to purchase. What would be terrible, in my opinion, is if you're ready to go, you have money in the bank, you've got great credit, but because of this, you take the wrong steps because you don't know any better, and now you don't have money for a down payment, or you've got a low credit score, which means it's going to be tougher for you to qualify down the road. And then another situation would be refinancing. So again, most mortgage lenders aren't going to be able to close on that refinance transaction until after you've gone back to work. But the good news is there's not the same sense of urgency in the refinance transaction as there is in the purchase. You can kind of set the deadlines. You can have a longer lock. So when we in the mortgage industry start a transaction for you, we're going to lock your interest rate for a certain number of days. So even like if you're on a 30-year fixed mortgage, you might have a 30-day lock, which means we're hedging the market for 30 days to get your loan closed. If you're doing a refinance transaction, my recommendation right now would be to do either a 45 or a 60-day lock, which should give you plenty of time to get back to work and for us to qualify you correctly. Now with that, if you're refinancing, rates are super low. It's an amazing time to refinance. Personally, I did a loan. I purchased my house a year ago. After 1 year, I was able to drop my interest rate by 7/8 of a point. For some people, that'll make sense. The bigger loan amount you have, probably the more sense it'll make. The smaller loan amount probably is not going to make as much sense. But at any rate, when your income is uncertain for the future, it's a great opportunity to look at how can we save money and protect ourselves, regardless of what the economy starts doing the next 3, 6, 9, 12 months. So that's my tip for the day. Go ahead and post your questions down below.